Let's take a look at shares of Tesla trading lower, down about just over 2.5% after more price cuts in China. The EV maker slashing the prices of its Model S and Model X each around 7% in China. This comes against a tough backdrop economically, Seana. When you think about what's been playing out in China, we were talking about this yesterday. The latest economic data pointing to continued weakness in the market. Should note these price cuts coming back in the market after Tesla, along with 15 other car makers, essentially signed a letter saying that they won't be competing under abnormal pricing. But this shows you how competitive the market is, and Tesla certainly not alone in pushing for this. Their Chinese rivals have been cutting prices as well. But, I was thinking back to the comments that we got from RBC's Tom Narayan yesterday, who said there's too much concern around the price cuts because at the end of the day, if you've got higher volume, even with the lower margins, that's a positive for the company.
Yeah, and that's at least, it seems to be how Elon Musk is looking at it, because he's remained, at least for now, committed to these price cuts, always leaving the door open for more. We talk about the demand picture, what exactly that looks like. Obviously, over in China, the very, very slow recovery that we're seeing, all the problems, the disappointing econ data that we've gotten out over the last several weeks, certainly painting a tough picture for Tesla and obviously those domestic players there. So Tesla needs to do all it can to better compete with those domestic players. How much pressure this is going to place on margins, at least in the near term, we see some analysts a little bit more concerned than others. Dan Ives of Wedbush is also one of the analysts that does think it's a smart play in the end and will eventually benefit Tesla. It could put some pressure, though, on the stock in the near term. And we are seeing the stock off just around 2.5% today.